What is going on, investors? Hopefully guys are doing well out there. We're here to talk about Lockheed Martin Corporation, ticker symbol LMT. Company's obviously been in the news more recently because you got that conflict in Ukraine, and Russia is certainly helping companies like this business. And they reported their Q1 earnings before the bell today, and we'll talk about them. We'll take a look at the revenues, the profits, the margins, the different business segments. We'll take a look at the balance sheet and cash flows, and then we'll get over this and look at it from a technical perspective as well. Obviously, with that conflict kind of getting going at the beginning of this year, you've seen Lockheed Martin just rally hard over the last 3 months. Stock's gone up over $80 per share. We'll talk about that and more on today's show. Now, in terms of Lockheed Martin, we are, unlike a lot of stocks that we've been talking about here on the channel, this one's actually closer to its high of its 52-week range of $480 per share. We're off a little bit. I am recording this during the regular session. Stock's off about $5 per share, down to about $461 per share. Now, we do get a dividend with this one. So despite being up 30% year to date on Lockheed Martin shares, you still get a 2.4% dividend yield. And from a traditional valuation metric, which we'll look at here in a second, we'll look at price to sales on Lockheed, depending on what kind of company you compare this to, certainly not as wildly overvalued as maybe some of the tech stocks that a lot of people were focusing on in years past. Now, Lockheed's Q1 came in. They came in with revenue of $14.96 billion. We'll come over here and we'll show this to you, and we'll compare it to a year ago period, but that was down actually 8%. So despite kind of the tailwind of a conflict in Ukraine kind of kicking off during this quarter, we still got a little tailwind of that supply chain still negatively impacting this company's ability to really deliver the goods. They missed expectations by about $530 million. Now, Lockheed also gave us guidance for the full year. So we've got a really good idea on what Lockheed is going to do for the full year. They're going to do about $66 billion worth of revenue. Consensus was basically right about there. The EPS is expected to be about $26.70 per share. Again, EPS was essentially right there, about 8 cents higher on that consensus side. So Lockheed basically has telegraphed the whole year, and so that could also weigh on the shares just a little bit. And we've actually seen really since that initial spike in this stock in February, it's basically hung out in kind of that $450, $460 range for a few months now. And part of that is because Lockheed is really telegraphing kind of their earnings and their sales, and they tend to be relatively accurate that. Now, in terms of the traditional valuation with Lockheed Martin, when you see this company surge 30% year to date, and then you see sales kind of rock back by about 8% year over year, well, all of a sudden your price to sales multiple is going to get a little stretched over at Lockheed. And so you got to think about that to a certain degree, because anytime Lockheed Martin, I've got a 10-year price to sales chart of Lockheed. This is a trailing 12 months price to sales view of Lockheed Martin. Well, anytime you get close to about 2 times sales on this one, well, it tends to have a pretty big pullback in terms of that valuation metric. Now, some of you might be looking forward. Okay, so we have $66 billion worth of revenue that Lockheed is projecting for the full year, and we've got $127 billion valuation, probably not including today's drop of about 1%, but you're sitting right there at about 2 times sales on a forward basis with Lockheed Martin as well. And we'd have to assume when Lockheed Martin gets to that kind of 2 times sales mark, well, investors tend to show up, or sellers of the stock tend to show up. We'll see if that happens this time, because things are slightly different, obviously, with Lockheed. Obviously, over the last 10 years, we've had a lot of conflict in the world. I'm not going to ignore that, but we hadn't had kind of this newer conflict that we've seen, and maybe a lot of unknowns with the Russia and Ukraine conflict. The other thing that could eventually be a tailwind, and we'll talk about this when we get to the numbers, is the biggest reason why Lockheed Martin missed in the most recent quarter is the fact that they have a lot of supply chain issues, and that is hurting their ability to deliver products to the customers that they need. So I think the most bullish scenario for Lockheed Martin stock to really hold these gains, if not expand them, is obviously we need a little bit more conflict, or a prolonged conflict here in the world, and you need supply chains to kind of loosen up and get a little bit better. If both of those things happen, I think that'll be absolutely fantastic for Lockheed Martin. The odds of both of them happening this year or over the course of the next, call it 24 months, I don't know what the probability of that is. I would say maybe somewhat low. Now, in terms of net sales over at Lockheed, we talked about how they had 14.9, essentially $15 billion worth of net sales. That was down year over year when they were at 3 billion last year. Now, what is impressive for Lockheed is they have pricing power, and that probably makes sense a little bit because the fact is this company doesn't have a ton of direct competitors. There's not a lot of companies like this in the world, and this is why this company can generate such consistent profits year over year. And take a look at this. Our business profit last year on a quarterly basis was 1.75. We talked about how we dropped about $1.3 billion on that net sales year over year, but look at our business operating profit. It dipped barely $100 million. In fact, not even $100 million. So you barely budged on that operating profit, despite a pretty meaningful decline on that sales side. This company is absolutely just printing cash. You come all the way down to the net income side, and you get $6.44 per share on just quarterly earnings. Last year, you earned $6.56 per share. This is why this company pays a fat $11.20 dividend on its shares, because it comfortably makes that amount in just simply 2 quarters. Now, in terms of the different business segments over at Lockheed Martin, things are looking okay. Okay, we had all these declines on those net sales. They were down 8% across the board. The only thing that held basically firm or actually went up on that net sales were the aeronautics divisions. That is the largest division of Lockheed at $6.4 billion. Everything else is south of about $3.5 billion. So that is a key driver. We did see margins contract a little bit on those aeronautics on slightly larger sales. They saw that their operating profit declined by about 2%. But we did see margin expansion on these missiles and fire control because we had our sales decline by 11%, but our operating profit declined just 3%. So you saw a little bit of margin expansion there. Operating profit down 5%. But again, when your net sales are down 8 and your operating profit is down just 5, it is showing you that you got a little bit of pricing power, and we'll see if Lockheed is able to flex that in upcoming quarters. In terms of the balance sheet, I actually like what this company does. We'll look at the cash flows here in a second, but this is a company that's wildly profitable. They don't, and it annoys me about especially the major FANG stocks that have 40, 50, 60, hundreds of billions of dollars sitting on the balance sheet doing absolutely zero. I actually like that Lockheed has very little cash on the balance sheet, quite frankly. Okay, you have $2.5 billion in receivables. That's not necessarily cash, okay? But cash and cash equivalents, just $1.8 billion, okay? And this, again, is a company worth over $120 billion. They have just $1.8 billion worth of cash. They do have a large amount of money, they recognize it as an asset, these contract assets. This is essentially like governments signing contracts with Lockheed to deliver something in the future. They got $12.1 billion worth of those just sitting on the sidelines. At the beginning of the year, it was 10.5. So we're seeing those contracts start to rack up with Lockheed. Certainly something that could benefit. The more conflict you have in the world, the more governments will line up behind Lockheed. You come down to the liability side, you got $11.1 billion worth of debt. This is another reason why I said, well, this company only has $1.8 billion worth of cash, and that's because they have $11 billion worth of long-term debt. We're used to looking at really financially healthy companies that could wipe out their debt with just their cash balance. This company can't really do that. And so it is something to think about, but I don't necessarily think it's that big of a risk. If this company had a lot of competition, I would be slashing Lockheed. I would absolutely be decimating this stock. But the fact is, this company just simply doesn't have a lot of competition. And so the low cash, relatively high debt ratio, not something I would be really concerned about. Also, the thing is with Lockheed is this company absolutely print cash. We talked about how their net earnings in the most recent quarter was about $1.7 billion. Last year, it was at $1.8 billion. Look how much flows all the way down to the cash flows of the operating activities, $1.4 billion. So off of $1.7 billion of net earnings, over 1.4 billion of it is positive cash flow. Same thing holds true to a year ago period. Whatever this company prints from a net income perspective, almost all of that flows down to positive cash flows. That's absolutely fantastic. What's also impressive about Lockheed is while they're on the cutting edge of a lot of things, look at capital expenditures, just $268 million in the most recent quarter. It's actually lower than where they were in the previous period, $281 million. A company like this kind of does a lot of research and development, but then is able to monetize those products over a very, very long period of time. And that's why you see relatively low capital expenditures based on the cash flows that this company is generating. So what are they spending the vast majority of their cash on? We talked about how we had total current assets last year at $3.6 billion on that cash line. It's basically been cut in half down to about $1.8 billion. Well, they're buying back the shares. They bought back over $2 billion worth of shares of common stock in the most recent quarter. They paid $767 million worth of dividend. This company raises their dividend practically every year as well. So you're getting the benefit of conflict in Ukraine. You've got a buyback. You've got dividend. You've got a yield that's still relatively attractive, although counted for inflation, it's not that great, but that's another story. You got momentum in this stock. What's not to like with Lockheed? Well, the trade's kind of gotten a little bit crowded, okay? This thing just burst off, okay? It was really comfortably traded on this longer term trend line. So I've got a pretty long chart here. It goes back about 8 years with Lockheed Martin, and I love to do this with stocks, okay? I love to see if there's just this longer term trend that's in play. So we've got this green line right here, and you notice that this stock has just kind of been tracing this line for a really long period of time. Sure, there's been some times when Lockheed is traded underneath this longer term trend line, but we're looking at an 8-year chart. Over probably 95% of the time, maybe even longer than that, this stock is traded above its longer term trend line. But what we have to factor in is when this stock gets way extended over and above the trend line, like right now, it's like, it's $60 or $70 higher than its long-term trend line. Well, the stock typically does these kind of pullbacks, okay? And we might want to change this to a red arrow because red candles tend to show up when you get relatively high over and above the trend line. So I would expect with Lockheed, the stock to take a little bit of a breath. It's really telegraphed its earnings. We talked about it from a valuation perspective. The stock tends to pull back when it gets close to 2x sales. The stock is trading right at 2x sales, both on a trailing basis and a forward basis. I would expect this stock to take a little bit of a breather. I'm not talking about a major drawdown, but this one could pull back to areas of support down here at about 380. Again, this is in the little bit of shorter term. Lower than that, I wouldn't necessarily expect it. I think the tailwinds are too strong with this company. And again, the pull back, it really depends on how fast it pulls back. If it pulls back pretty quick in the next month or two, you could come back down to under $400 per share. Could definitely be a buying opportunity. Now, if it walks its way back and it takes its time, well, you've got areas maybe a little bit higher than $400. Really, I personally would target, I already own some shares of Lockheed just kind of as a safety portfolio and as a safety net and kind of a counter trade because as we've seen, a lot of stocks haven't been performing well. Lockheed Martin is a stock that just consistently performs well. You look at stocks maybe like Costco as well, Walmart. There's a couple stocks out there that just consistently perform. They don't necessarily go up rapidly, although Lockheed certainly has done that over the last few years, but I would expect a little bit of a pullback in this one. I would be interested in adding to my position probably south of about $450 per share, maybe even more specifically south of about $420 per share. I would be pretty excited about that. You get a pretty good dividend rate on this one. You've got some tailwinds behind this company of the supply chain potentially loosening up, and also you have that prolonged conflict, which I think, not being a war expert myself, probably not going to wrap up anytime soon. Certainly will be beneficial to Lockheed Martin. That was Lockheed. Hopefully you guys enjoyed today's video. I'll be back again soon with lots more this week. Good luck with your investments.